Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data you need to know ahead of the Wall Street Open. Coming up, US inflation on deck. It's going to offer us clues as to the Fed's next move. Meanwhile, Alibaba beats quarterly revenue estimates. However, it's the tech and the chips that are in focus for this industry. And the House of Mouse, Disney's shares in focus after mixed earnings and comments from Bob Iger. Good afternoon, I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long before Wall Street starts trading, we'll get a special guest from LSEG Lipper as well, Davy John. Before we get to the markets, we've got some breaking news just crossing the headlines just now. This is the US inflation figure that we have been waiting on, and the headline figure I can tell you for July, month on month, coming in at 0.2%, bang in line with expectations. And for the year-on-year figure, 3.2%, just slightly less than the 3.3% we were looking out for. If you strip out energy and food, though, this is more interesting because this is what the Fed is watching out for. The month-on-month figure for core CPI, 0.2%, and also for the core CPI for the year-on-year figure, 4.7%. Let's cross now to LSEG Lipper's Davy John to give us his reading. Davy, what do you think of these numbers?
Well, it's kind of in line with expectations, as you said. I think the interesting thing is there are, whereas there's a sense that we are now in recovery mode, the worst is over, we are still seeing some inflationary pressures up ahead. I don't think we're out of the woods yet. And we've had news over the past few days of Russian attacks on grain ships, that's going to be a hit food inflation on core goods. Climate effects within the US as well will also have a similar effect on harvests, and we're seeing that more broadly. So good news so far, but I think a little too early to say that whereas the worst is over, it's all over and we're on a path to recovery.
Dewey, just keeping you there, because I'm looking at the volatility index and that's come off slightly, but also if you look at the crude, it has bumped up a touch, and also looking at the US dollar basket, it has made a significant move lower. That core CPI figure, which is what the Fed looks at, do you think that this now means that the Fed could perhaps ease off slightly on its interest rate hiking?
Quite possibly. Weaker dollar is going to, obviously, it's going to help exports. It's going to push import prices up, though. The Fed's been quite aggressive. Bond investors we've seen so far this year have basically tried to buck the Fed on this one. I think so far have been wrong. I always hate trying to second guess the Fed because it's so easy to be wrong. There's an argument for it, but I think they'll want to see this through, and I think they'll want to see greater persistence in lower rates. So my bet would be no, but there's a low level of certainty with that, if I'm being honest.
Thank you very much. We'll be sure to check in with you throughout the week and the following week when we get more data points out of the US as well as China, because we've had recent weakening data out of the world's second biggest economy. Speaking of China, we have got Alibaba as well in focus, because earlier in the session, Alibaba came out with earnings. Alibaba is an all-session stock on the IG platform, as you know, and it has been tracking higher, up some 2.6% after the company reported its first quarter sales that beat analyst estimates. This is compared to the same period a year earlier when there were strict pandemic-related lockdowns. The Taobao and Tmall marketplaces bounced back, helped in part by the 618 shopping festival. This is, of course, a key shopping event in China. However, many of the market watchers and those trading this stock have said that actually what's key is to find out what it's doing in the chip space. The FT have also reported this. The likes of Alibaba and its peers looking at investing in generative AI systems, making orders worth some $5 billion. Baidu, TikTok owner ByteDance, Tencent, they've all made orders worth $1 billion to acquire these processors from NVIDIA, says the FT, and they'll be delivered at the end of the year, according to that publication. Just showing you NVIDIA stock, which is also all sessions on the IG platform, because it has had a meteoric rise since October 2022. Easily beating the Tech 100 or the NASDAQ. Many of the companies that have said that they've had destocking pain include 3M, they include Hugo Boss, Maersk as well, and also Heineken. A lot of this to do with all that stockpiling during the lockdowns, and now they have to get rid of that stock. And the thought process is that if chips and AI can help companies like Alibaba be nimble when it comes to stocking, then perhaps it will improve its outlook in the second half. Disney, also one that we're watching, it posted mixed results on its fiscal third quarter after the close. This is after ongoing streaming woes and restructuring costs from pulling content from its platforms. Bob Iger, the Disney chief executive, also said that it's a challenging environment in the near term. Just getting you across the shares ahead of the open, Disney, another all-session stock on the IG platform. If you want to trade that, you can ahead of the Main Street Open, and that is currently looking flat at the moment. Disney's per share, earnings per share, $1.03 versus 95 cents that was expected. Of course, all this comes as Disney is also facing fierce competition in the streaming space. Now, keeping an eye on oil prices as well, because that has seen quite a bit of volatility ahead of that inflation figure out of the US. This is US crude on the platform. Oil prices stabilizing ahead of that inflation data. Let's see where it is now. Just slightly higher at 8,359. Before that, it was at 7,820. Our Chris Beecham has been looking at the technicals to have a look at where oil might head in the coming weeks.
Oil prices continue to rise as reports of further Russian and Saudi production cuts support the price. And fundamentally, expectation that recession will not occur until at least maybe Q2 of 2024, if not later, have revived hopes of stronger oil demand into the final quarters of 2023. So oil prices hitting their highest level for the year so far, with no sign of slowing down. That comes at an interesting time, of course, with the US CPI reading and hopes that inflation is abating. If energy prices keep rising as they have done, that could make life a bit more difficult for markets as we head into the final 4 months of 2023.
Chris Beecham there looking at oil ahead of those inflation figures. Before we go, here's a look at how the markets are looking ahead of the open. We are seeing futures come off slightly after those numbers, the inflation numbers, and also keeping an eye on oil for you because that has been ticking slightly higher, as I mentioned, after the inflation figures out of the US. Well, that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow us on @IGCom and @Angeline Ong on Twitter. This is IGTV.